Hi everybody, Craig Shacklett with Casino Marketing University. I've got a very special guest. This is actually a repeat guest, but it is 4 years have passed, and but we haven't aged a bit, as we've been talking about before. But I'm super excited to have Ray Kondler, founder and managing partner of Kondler and Associates, a CPA firm out of Las Vegas. Ray, thank you so much for being here.
My pleasure. Good seeing you again.
So, Ray, why don't we start off by just, for those that didn't tune in 2017, tell us a little bit about yourself and your firm.
So, Kondler Associates is basically in headquarters here in Las Vegas. We have another office in San Diego and in New Jersey, and basically we cater. Our major niche and specialty is taxation of gamblers and poker players. The firm here, we also do a lot of audits of casinos and things like that, but our main expertise is in the taxation of the gamblers, and being in Vegas, that's basically the place. But we handle gamblers all throughout the country, Oklahoma, Texas, all the new markets. Starting to get a lot bigger now into crypto taxation, and also, which is becoming huge, is sports betting. So as more states, I think Ohio signed yesterday. So as that gets going nationwide, there's going to be more of a market for, unfortunately, taxation of the wins that they have in sports betting. So it's an interesting niche, and every day it evolves.
Now, how did you fall into this niche? How did you start focusing on gaming?
No, I mean, the firm, being in Vegas, always had some type of blueprint into, taxation of gamblers. As I said, we audit casinos, so we know what reports and stuff they filed. So that kind of led into it too. And then about 6 or 7 years ago, we started to do marketing down at the World Series of Poker at the Rio. And we set up a marketing booth to, educate people on taxation of, their winnings, because they would win $500,000 and go, what do I do with it? And we would try to help them out. And from there, it became that we became one of the experts in the field of taxation of poker players, and then obviously gamblers from slots and other kind of table games and things like that.
So now most of the URComped customers, base has grown quite a bit since 2017, but we may have a couple professional poker players, but I think most of our customers are higher level slots and table games players that the kind of will get W-2s from their slots. So maybe thank you. That's why I don't give tax advice. So maybe we could start with, what do kind of the higher level, but not insane, but high level gamblers that play on slots and maybe video poker, what do they need to think about? And then we could shift over to table games like blackjack players, not necessarily poker players.
In theory, slot players and any kind of table game players are actually taxed and looked at the same. So when you when you have winnings, and theoretically, according to the IRS, you're supposed to, pay tax on all your winnings and declare them. But there's a difference for gamblers, is that can you file as an amateur or you can file as a professional. Basically, a slot player or a table game player, or blackjack player, it's an individual, but you have an option to file as an amateur or an option to file as a professional. And there's some very distinct tax advantages between the two. So, we kind of guide the players on how they should be declaring and what they can deduct.
So there's amateur and there's professional. So if they say I'm a professional gambler, all their losses they can write off. If they say they're professional, does that preclude them from also running a business on the side? Or what are some things that you would walk them through?
So basically the amateur person is person who has basically a job, and then they go to the casino on the weekends or whenever, and they play and they win. Okay, so an amateur player can always deduct their losses against their winnings, always. Okay, it's an interesting tax situation, because when you file a return, you include all your income as other income as a gambler, and then you get to deduct it on Schedule A of the tax return as an itemized deduction. But you always take your losses against your winnings. Okay. Professional, though, files that, if they qualify, we could talk about how they qualify, they can take all their other expenses, such as travel, meals, training classes, things, CPA fees, things like that, they can take all those expenses on Schedule C as, quote, like a business, and they get, more deductions than the amateur does. The downside of being a pro is whatever profit is subject to Social Security tax, versus the amateur, they are not. They just pay regular tax, not Social Security tax. So basically, we guide them on how they would qualify, and you can qualify from amateur 1 year, pro the next year, and has nothing to do with, according to the IRS, nothing to do with how much you make. This really has everything to do with how much you play. So you can make an argument, even if you have a W-2 job and you're playing a significant amount in the casino, that you also could qualify as a professional. But usually, when there's not a lot of travel involved, or all these other expenses, the amateur is, usually the easiest way to go, because you still can take all your losses against your winnings.
Now, let me ask you a scenario where we have a lot of customers that are retired, that either they've saved a lot of money, or they've got a pension or something, but they're always traveling to go on cruises, and they of course play a lot, and we get them comped on the cruises. They gamble a lot. Could it make sense for some of them to become a professional player?
And one of the major points that comes into account, especially the older people, are they're getting Social Security. Okay, so when you do a 1040 tax return, your Social Security income goes on. Social Security can be up to 85% taxable if you have income over a certain number, 25,000 single, 40,000 married. Okay, your W2G winnings go into that calculation. So, argument's sake, somebody wins a $100,000 slot tournament, okay, and they get Social Security, and say they had no other income, small pension, a little Social Security. By putting that, you can always deduct your losses on the $100,000, but the $100,000 of income is above the line for calculations of how much Social Security is taxable. Okay, so even though you might not pay income tax on that winning because you have a lot of losses, you're going to pay income tax on the Social Security because it's now 85% taxable. How do you get around that? You file as a professional. Okay, they have no other job, they play a lot, they can easily file as a professional. So, argument's sake, Schedule C, file as a professional, show the $100,000 of income, $100,000 of losses, net is zero. Guess what? Social Security is not taxable. And we see that a lot I've amended many returns over the last couple of years, because a lot of people don't know what we know, and they make that. So yes, they write off the losses against the winnings, but they make the people pay tax on Social Security tax. So we go through all the qualifications to see if they file as a pro, and if they do, we go back and amend it and get them refunds. So it impacts more people that you have that are older, that do have Social Security tax. And a lot of these other calculations in terms of Social Security and things, like I know my mother won she had a big jackpot, and when her qualifications for how much her Social Security was, when Social Security got her income statement, they kind of looked at it and say, hey, you had a lot more income. So that also is, you have to look into that too. So basically, long story short, yes, if a lot of people are older and getting Social Security, they should file. If they qualify, they should definitely file as a professional.
Do you have to make that determination? Can you make it at the end of the year? Can you make it after the year and when you're filing taxes, or
you make it when you file your tax return?
Okay, that's really interesting. So
yeah, it's an interesting quirk, because I said it's the way it's shown on the tax return, above the line and below the line, which is the adjusted gross income line. That's what people have to look at to see what's taxable and what's not. So, and it actually is interesting too. It changed since the last time we talked in 2017. Is that the IRS increased the standard deduction last year. Okay, where the standard deduction is now 12,000 single and 24,000 married, just for argument's sake. Okay, so say somebody wins a they win a slot tournament for $25,000. Okay, they don't own a house, they don't itemize their deductions. And they don't say they don't qualify as a pro. The $25,000 goes above the line as income. Remember, I said in the $25,000 can be deduction. the IRS already gives you the $24,000 deduction for being single, and for being married, or $12,000 for single. So a lot of those losses could be lost in that standard deduction, where you would also want to file as a pro to get the full deduction of your losses plus the $24,000 they're giving you as a standard deduction. So there's a lot of tax planning involved in when we get these, especially new clients or referrals. Like, hey, we got to figure out what's the best way to show it to get the major deduction, because they're going to give you $24,000 anyway as a standard. So why lose that against your gambling losses? File as a pro and get both.
Hey, this is worth the cost of admission just in and of itself. So everybody tuning in, if you fit that bill, and I think most of us do, where you're a higher level gambler, it's worth reaching out to Ray, get with one of his associates, to just kind of walk through. I assume, do you have a kind of a checklist, or do you have a process where you can help people figure out?
First, one other thing I want to tell you about also is that we have a lot of high gamblers who set up LLCs, and they set up LLCs and S corporations, and throw the income, from there into the LLC S corp basically. And then if there's some significant numbers, they can take a salary from that S corp and put $1 gajillion away in pension plans and pay zero tax. That's another planning thing that that we do. That's also out there. So it's something to look into. And you're talking, 250, 500,000 winnings, things like that. W2Gs. We kind of try to get more people into LLC S corps.
Now, there's been talk. It's been going on for a while about raising the what triggers a hand pay. I think it's still $1,200, right? Is there still talk about raising that, or what's the status of that?
Yeah, $1,200 and $5,000 for a poker tournament. They did talk about lowering it to $600. I don't think that'll ever pass. I think the casinos just have the lobby will just say we don't want all that paperwork. It's imagine giving one for everyone over $600. It would be a nightmare. I mean, good for us business, because more people would get forms. But go, what do I need? I need help. But the point is, I don't know. I just think that's crazy, and that's a big burden to the casino, and then also to the to the players. My opinion.
Yeah, I would agree with you. Okay, so slot machines, it's above that threshold. You get a W2G. Casino reports it. What about table games? Is there anything on Blackjack or anything that triggers a tax form?
No. Unless you really, I think if you hit a progressive card, 3-card poker or something out of a certain number, I think it's 5, that they'll give you one also for that. But anybody just sitting down and playing, there's no record of any winnings when you leave. And obviously that's up to the players to, declare their winnings. According to the IRS, you're supposed to declare all your winnings and then take your losses against it. But with no forms, right, there's nothing on record.
Here's a question, since we do send a lot of gamblers on cruises. I think I know the answer to this, but it's always better coming from a professional. If somebody has a big win when they are on a cruise in Europe, do they still have to report it when they get back to the U.S.?
Yes. I mean, as a U.S. citizen, you have to pay tax, and you have to show income on your worldwide earnings, no matter where you make it, no matter what it is. So you are required to report it. In most cases, will it be a W-2G? I've seen most cases not, so it's always up to the people that earn it. But IRS rules, you show tax on what your total earnings are worldwide. That's how you knew the answer too?
Yeah, I knew it, and partly because I made that mistake when I was younger. I worked on a cruise ship, and I thought, well, I'm working in Europe. I don't need to report this. And then sure enough, I got a letter from Uncle Sam like 6 months after I got off the ship, asking where their money was.
Yeah, one of the requirements are, you have to pay on the worldwide income. And also, we can get done if you want to ask the question, but also if say you live in Nevada where there's no state income tax and you go win a major slot in California, there's going to be reporting requirements in California because you earned it there. And in most cases, if you're not a resident of California, for example, they'll just take out 7% right away. And then you could also file later to get a refund if you have losses against it. But yeah, depending where you earn it, there could be state requirements on any slot winnings.
Okay, and I know we covered a lot of this in more depth in our previous interview, so I highly encourage. We'll probably put a link in the description so you guys can go back on some of the kind of basics, because I think a lot of those things haven't changed. But one thing that has changed since we spoke last is the rise of cryptocurrencies. And I know we were talking before the interview that a lot of your poker customers and a lot of your gambling customers in general are starting to get more into crypto. Maybe why don't you just kind of give us your an overview of tax implications with crypto and what you're seeing?
Well, what we're seeing is a lot of underreporting. People aren't reporting, especially the last couple of years of crypto. As it's coming bigger, it's going to be a big IRS go after. But crypto right now is basically treated by the IRS like a stock. So it's similar to buying Apple shares. You buy Apple at $100 and you sell it at $125. You pay tax on the $25. If you hold it more than a year, it's long-term gain versus short-term gain. Crypto is taxed right now exactly the same. The issue we're seeing is it's very difficult to track what your actual profit of crypto is, especially if you're doing transfers in certain wallets and things like that. There are programs out there that will help, but we're finding it's very difficult to really keep track of what your profit is, especially if you're exchanging coins every day, Ethereum for Bitcoin and Bitcoin for Mana and whatever. So it's very difficult, but right now the burden is on the taxpayer to say, hey, I need to pay tax on this because I made money. The IRS, I know, is hiring agents to teach them to learn the taxation of crypto. And they actually, one of the first things they did last year, I think, they started to send letters to the biggest, crypto thing, which was Coinbase, and said, hey, anybody who had a transaction over 20,000, we need their name, address, and social security number, and how much they cashed out for. And those people are now getting letters saying, you cashed out for a certain number, you didn't report on your tax return, so now they want tax on it. We're getting a lot of calls on that they're getting these letters. And actually now on the tax return, there is on page 1 of the tax return, there is a question you have to answer. They changed it for 2021, but basically 2020 was, did you acquire, sell any form, any cryptocurrency? And you have to answer yes or no. So it's going to be a money maker for the IRS, so they're going to get their hands on it. It's going to take a while. My point is that always, if you have crypto gains, you should start reporting them because they're going to find out sooner or later.
Now, I heard something, and again, this wasn't from an accountant. This is kind of like second or third hand, but I've heard there's a loophole where you could, let's say you have crypto and the asset's growing, you could take a loan out against the crypto, and then you're getting cash, but you're not selling the crypto, you're borrowing against it, but you don't have to pay taxes on it because it's a loan.
Yeah. You're loaning, right? If you're taking a loan against the crypto and not really, it's actually when you liquidate the crypto, that's when it becomes a taxable event. So if you're taking a loan against it to buy something, that's not a taxable event, in my opinion. It's the actual buy, and the actual sell.
Okay, this is something I started to ask you, or I did ask you about, and I kind of cut you off when we were off camera because I'm like, no, this is good stuff. Let's save this. So a lot of movies, a lot of TV shows will talk about, the bad guys are laundering money through the casino. And I think I kind of get it, but I still at the same time don't. So maybe walk us through, like, what's the standard laundering money through the casino? What are the bad guys doing?
Well, I mean, it could be any illegitimate company or business. It could be drugs. It could be, something like that, where they take the cash, and instead of depositing in the bank where there's a record, they would just take the money at the casino, open up an account, put it in the cage, take money out of the cage, gamble, cash it in, and then they have the cash. So in theory, it never hit a bank account to be shown as taxable income, and they're just taking the cash to launder it through a separate business other than just putting it in their safe deposit box. You know what I'm saying? So it gets a little complicated, but in essence, that's how it works. They're taking money, and they also could also set up, if they have a business, they could set it through the business, cash it out, go to the casino, put it through there, and run it through the gate to cash. There's a couple more steps involved, but that's the way they're getting it. They're using the casino to get the cash and not really throwing it through a bank account.
I remember watching something on Pablo Escobar, and it talked about how he laundered money by owning a big soccer team in a big soccer stadium, and he would say, "Oh yeah, it's a sellout every game," and then they'd show the video, and there's like no one there, but he's like, "Oh yeah, we sold all this, all the tickets, we made $1 million a game or whatever," and so that's how he laundered money. That made sense to me. Like, okay, or there's a car wash, and yeah, we had 1,000 cars go through there. No cars actually went through. With the casino, when they put in the money and then take it out and then cash the chips, are they pretending like they won a lot and that's where the income came from?
Of course. Yeah, of course. And there's no, and the casino isn't reporting the cashing in of the chips to the individual because they're just taking money in and out of the cage. So there's no reports. There's some reports they have to file on certain numbers. I'm not sure how much they have to file a report on, but because it keeps changing. But they're throwing it from these businesses through the casino to cash it out.
Now, one thing that's changed, at least from our perspective, dealing with higher level players, is there's more KYC, know your customer restrictions since we spoke last. Has that made that money laundering more difficult? And I guess that's
definitely no, in my opinion, more difficult. You know, I get clients who, you know, the banking industry is, you know, is getting harder. Their laws are really changed. I had a woman client who took out money to give to her son as a gift, and the bank gave her a hard time. Like, you know, why are you taking out, you know, $70,000 and you know this is a lot of money and things like that. You know, the casinos, they don't have that. They'll have the players will have their, you know, people who the hosts and all that kind of stuff, but I don't think it's as bad as the casinos are starting to get into banks. I mean, it could be later, but casinos usually aren't as stringent as the banks.
Is there any, because I think we covered a lot of ground here, and I don't want to rehash a lot of the questions we went over in 2017, which are kind of the basics. Actually, one more that I do want to ask you, because maybe something has changed, and that's about like tracking your winnings. Obviously, with when you get a hand pay or something, the government's going to know about that. To offset or to track your losses, a lot of people will use the win-loss statements from casinos. What do you recommend? Because I've also heard some people keep a win-loss journal. What do you tell people about how to track your losses?
I was used to being about the session method and things like that. We're like more like just keep a track on, you know, as a weekly, monthly basis of your winnings and your losses. There has been, I remember the case recently where somebody just gave a win-loss statement, and the IRS basically had a problem with that because the people didn't have a corresponding logbook. So I think just handing, as I said, knock on wood, none of our clients have really gotten reviewed or audited, but I think just giving a win-loss statement in an audit is not gonna fly. I think, you know, it's got to be more. You have to be more of a tracker of your daily or monthly winnings and losses. So we have a lot of clients who have an Excel spreadsheet to just say, hey, especially players who play every day, and they'll track it. A lot of people don't. You know, in real life, they'll say, Ray, you know, I won, you know, 50,000 in W2Gs, but I lost 50,000. You know, I can prepare the return their way. I'm not auditing it. Okay. If they get reviewed or audited, they can always go back and recreate with logbooks. So, you know, do they have to keep it to get the deduction every day? No. But if they get audited, they'll have to go back and recreate it. And as I said, you know, most people, I've never really ever seen gamblers audited. But, you know, we do get a lot of people have significant winnings, and they always say, Ray, I never made anything. Well, your chances of being audited are a little higher. So we're more like, you know what, you know, show something as profit, do the best you can to figure it out. And if you show something, your probably chance of being audited a lot less than showing, you know, no income at all. But I think the IRS knows that most players who especially play a lot don't win money. So maybe that's their thinking, that they don't audit as much, but we haven't seen many audits in terms of gambling losses against winnings. But the right answer is to prepare some kind of Excel spreadsheet or an app or something that can track what your daily winnings or losses. One little guy has a little notebook with the wires in it, and he brings it to my office every year, and it's got 300 pages in it, and he totals it every day, and that's perfect. And the IRS would take something like that.
Ray, is there anything interesting, anything new, or anything on the horizon that maybe I didn't ask you about that we should cover?
The IRS is really tracking W-2Gs. Never used to get a lot of people who get notices from the IRS that you didn't report it. Like, for example, anything you do at work, W-2, a 1099, and if you don't report it, the IRS has a matching program. Well, they'll say, hey, Craig, you're a W-2 from your cruise ship, and you didn't report it, so now you have to pay tax on it. Didn't used to see a lot of these on W-2Gs. Now I'm seeing a lot of them. The casinos are really having to really get up back into recording them, or they're just starting to send them in. But we've just seen a lot of it uptick in people getting, hey, you had 20,000 in W-2Gs from gambling and you never reported, so now pay us the tax. So we have to go back and amend and show the losses. So as I said, they're getting really up to get the casinos in. But one thing I would tell people is if you get W-2Gs, definitely keep them and file them somewhere, because to go back and ask the casinos for them, it's like trying to find a needle in the haystack for some reason to get to their accounting department to get them. They don't have them. We do get a lot of questions. I actually had a couple called this week. A guy won 300,000 and a slot thing, and he called me and said, should I have tax taken out? And my argument to that is never. Try to get losses, because as I say, as a slot player, it's not, you can just not take your slot losses. You could take all your other gambling losses. You could take craps and blackjack and all that kind of stuff. Now sports betting. So, get as many losses as you can, not to pay, any tax on it. But I'm not a proponent of taking out, 10-20% and, try to get it back at the end of the year, which you can. But, I'm even, if that's not, I wouldn't recommend that. Somebody called our office, won $1 million the end of last year. And the same thing, we didn't tell them to take the tax out. We just said, well, let's see what losses you have, and we'll try to figure it out. But that was an interesting one. But we saved him a lot of money in tax with LLCs and pension plans and things like that. So we do a lot of that consultation. We never charge for stuff like that, so anybody can always call. But it's going to be a lot of reporting now. People are going to start getting these notices, so that's going to be a big thing.
Well, Ray, this has been super interesting. I know a lot of the URComped customers are going to get a ton from this. Now, where should people go if they want to learn more about your firm and how maybe they can walk through some of these things you talked about, like maybe considering becoming a professional, or just any tax advice? How can they get a hold of you?
Well, our website is Kondler with a K, Kondler, KondlerCPA.com. We have a contact form they can just fill out, and they can send me an email. We get back to them very quickly on that. The Vegas office number is 702-433-7075. We also have a website. If they go to PokerCPA.com, that'll go to our website also. But I said, we try to be more of a help in consulting. What's the best thing for the client? I see a lot of people, a lot of CPAs that don't have our knowledge. Oh, you got a W-2G? Hey, pay tax on it. Maybe we get some losses. Too bad. No, you have to look at it from a lot of different ways, like pro-amateur, LLCs, pension plans. You got to look at a couple of things. So as I said, we don't charge for consultations like that. But people can easily reach out to us and have any questions. And as I said, it'll get complicated because now even we talked about the states. I mean, the states are now losing monies, from California and things like that because people are moving. They're going to trace you you know, if you have a slot win in California, you don't live there, they're going to want you to pay tax on that because they're losing money. So the states are going to be more involved, you know, too, especially now with sports betting. We don't know, you know, what's going to happen with that. But a lot of people are now doing, you know, fantasy sports, you know, DraftKings and things like that. So we help a lot of people, you know, in that regard too. So it's fun to come to work every day because I love what I do, and it's also stuff like this that every day something more challenging comes.
Well, Ray, thank you again for your time, and I'm going to do a plug because it sounds like you work with a lot of amazing people, and some of them like to play. So if y'all are clients of Ray, check out URComped.com. You may get a free cruise or a nice trip somewhere. Thank you, Ray.